Good morning, everybody. Good morning. This is George, and we're going to be looking at multiple time frame analysis, or indeed the opposite of not getting involved in multiple time frame analysis. We're just looking at one single time frame. Good to see you all. Nick, Boyke, George, I can't go through everybody. Adina, Darius, Imad, Jimmy, Kevin, Stephen, Pat, Richard. Right, good to see you all this morning. Now, the argument goes both ways, whether we're going to look at multiple time frames or not. And there are those traders who will get really used to one particular time frame, and that is the time frame that they're interested in, and they won't look at anything else. Now, that could well be somebody who wants to look purely at a daily time frame, rather like this Kiwi chart that we're just looking at, New Zealand dollar against US dollar, and will take their signals purely off the daily. Now, as you will see, I haven't got any moving averages on here at the moment. I haven't got too many indicators at all, just got a Fibonacci, my fib finder grid, and by just purely looking at price action, which is predominantly the way that I trade, then one can actually take trades sort of based purely on this chart and do so in isolation to any other. Now, for end-of-day traders, then this is absolutely fine. We can just sort of have a relatively quiet life, wait for the trades to come along, and put those trades on. If we look at this right now, what we can see is that just a touch of analysis will show us that we've had price which has moved on down. It's moved on down in a series of waves. So we've got a wave one. We've got a wave two just snapping back. And this will just sort of help us come right to where we are just now. And what we can see is that we've got this series of waves that I'm just marking up. And we've got 5 of them. Now, Elliott wave watchers will be aware of a 5-wave pattern. And a 5-wave pattern is very often followed by an ABC type move. And we may well have had part of that already. And an ABC move will typically go all the way up to the start of wave 5, which is in this 81 region, and that's exactly where price has gone. But then price has actually come on back down, and it came back down fairly rapidly. And the New Zealand dollar suffered from a little bit of news that came out last week. The New Zealand economy is and has been for years largely an agricultural economy, and they export a tremendous amount of lamb and mutton, and they also export a tremendous amount of milk in the form of milk powder. And rather regrettably, some of that milk powder that they export have been found to contain a botulism, a strain of botulism. And that has absolutely knocked the New Zealand dollar for 6. As we can see, it's moved on down quite rapidly. But as is so often the case, that bad news may well have set up a buying opportunity. And the buying opportunity has been flagged up by this level. It's flagged up by pricing coming down to a relatively extreme level where there could well be an opportunity to get stuck in. And end-of-day traders would be looking at this, and they would be needing to take their signals based on price actually bouncing up from here. Now, the only problem that I have with just looking at one time frame is that it's fairly single-dimensional, and I like to take a rather broader view, because so often it's possible to get our trades on, and it's possible to get our trades on intraday. So for those people who've got the luxury of being able to glance at the markets during the day, then multiple time frame is without a doubt the way to go. But if we're just purely trading off daily charts, then absolutely fine. Just stay with the one time frame. And we might also want to be looking at the weeklies as well. So if we just look at the other time frames, and we can work this down to, first of all, the 4-hour chart, and that's given us a little bit more detail. In fact, this decline on down, not going to mark them up, but again, we've got a series of waves working its way on down, so that we've got this set of 5 waves coming down to this low level. That's that back level that we've got. It's also in the region of a previous low. So we've, without a doubt, had a move which has been a relatively extreme move, and then prices bounced up. Now, yesterday, if I put just a little bit more space between these candles, we can see one of, well, 2 key candles. So that was the gap down. Then we've got a candle which has got a long lower tail, small body, it's a hammer candle. Price then just bounced on up. We've then got a little bit of a correction back. And during the day yesterday, we got a very, very clear buy signal. And that buy signal came through because this candle, this green candle, which completely engulfs the preceding one, is a very powerful candle. And as it engulfed, that was the signal to put a buy in at 78,000. And as we can see, that one has paid off with price sort of moving up really quite nicely through, well, as we can see, around about the 70 odd pips mark. So there we are. We've got a signal that came in, and we could take that just off that 240-minute chart and just watch as that was about to engulf. And there are all sorts of alerts that can be set up for this type of candle, so that you don't necessarily have to be watching the screen all the time, but just maybe listening out for an alert. And within TradeStation, there are all sorts of different ways of setting those alerts up. Right, so that's just looking at then the daily chart and the 4-hour chart. If we now come down right the way down to the 15-minute chart, we can actually see a lot more detail of what was going on yesterday. Okay, we can see the big gap down overnight. And then we got a big rally that ran on up. And there's something of a disadvantage for us guys in the UK trading Australasian currencies, New Zealand dollar, US dollar, etc. And I quite often do that, Boyke. In fact, I find the hourly is not quite so important. Not quite so important. I've got all the detail that I need on those 4-hour charts, and then coming down on the 15-minute chart. Now, I will talk just a little bit about the half-hourly chart in a moment. But what we've got is an awful lot more detail. So there we are. These moves on these Australian Asian currencies so often kick off around about the 2:30 UK time, which of course is where those guys are getting stuck in, and at just about the time that we're really starting to take notice of what's going on in our market, which is around about the sort of breakfast period, 6 o'clock to 8 o'clock. Most of the Australasian traders are then thinking about just packing up for the day and want to head off to the beach, etc. But if we just look at what went on here, we then get the opportunity to get in very, very early indeed. Now, I've said that the signal really came through at about 78, but look at this. There was a signal much, much earlier on. And if we look at the wave formation coming down on here, we've got a very, very clear set of waves, got a 5-wave pattern that came right the way down to this back level, very important level, at an extreme, and price then just took off from there. So we've actually got, by looking at intraday charts, we've got an entry, a much, much earlier entry, which gave us a level, I can just pop it across there, And that's given us an entry level of 77.63.64. So it was the test, price then bounced on up, and away we go. The stop is also pretty important because we can put a stop in just underneath this low. And that stop is going to be, put a line across so we can see where we're going to want to put it, 77.43. So what we're looking at is a stop level of only about 20 pips. Whereas if we were just trading this off the daily and we were going to be taking the long at a level which was going to be above 78, we're going to have a massively wide stop in relation to what we can actually achieve intraday. So there we go. It just took off. It just took off. Yeah, I certainly can, Grove. What we're looking at then is this automatic fib finder. I just keep it on my charts. It moves dynamically with price. And what I'm interested in are the levels at which price actually gets to and pauses. Now, I've mentioned the bat level. It's one of the important harmonic pattern levels. There's also the Gartley level, and that's pretty important also. So these dotted lines are picking out the important Fibonacci relationships to previous highs and previous lows. All right? And of course, we've got a whole series of them where they pick up multiple highs, multiple lows. And then we've got blue lines, and these blue lines, these plain blue lines, these are the zigzags. And again, they pick out these significant areas of reversal. Now, I like to trade off these important levels, and the important levels that we see then are marked up on here, and it does this all sort of fully automatically for me. Now, I'm just going to also mention that this morning there was yet another opportunity for those who either missed that one or were looking for trades first thing this morning. And what happened was that price just plateaued, and it plateaued between UK midnight, more or less, and then at around about sort of 5:30 in the morning. Price was really going nowhere. It had a little attempt at the downside, little false break on the upside. It went nowhere, and then it started to take off on the upside with, when you get a breakout, this actually broke out there at 6 o'clock. Inevitably, there's going to be a pullback, nice little Hallmey break, and that signaled a rise. And we can see we get another one just over here, and it moved on up. Not massively, but it did still move on up. So there are, guys. I look on for intraday trading, the 4-hour chart as being very, very important, and the 15-minute also being a very, very good one to watch. Now, Boyke was mentioned, well, I missed out the hourly chart. Well, absolutely right. I did miss out the hourly chart. And what I tend to do is that I will alternate this to a 30-minute, and I'll also alternate it down to a 20-minute. But again, what we're seeing is that on these slightly different time frames, we will see slightly different candle patterns. And the all-important one here is this engulfing candle. Very, very powerful candle. And that led to this rise that we've seen shooting on up. Now, it may well have completed its move so far, and it's looking very much as if we've actually had a wave 1, a wave 2, and this could well be a completed 5-wave pattern. So, having looked at that one, then let's go and look at one which is not probably, but very definitely the most heavily traded of the lot, which is the euro. Now, if we look at the daily chart on the euro, this has been a very frustrating play. And we can see that by this broadening formation that there has been. Now, this broadening formation that ran for quite a bit of time has been running to these false break higher, false break lower. And essentially, price is exactly where it was last week, a week ago, just over a week ago. It has hit a back level. It has hit a back level. That was that rally on up from last week. On that day when we had sort of whipsaws moving in both directions. And the fact that it has moved up fairly strongly almost suggests that this 133 level is proving to be far too much resistance for it. And at the moment, the 32 level is the support area. The question is, which way is it going to move out of here? Well, I'm entirely neutral on it. I am absolutely totally neutral on it to expecting that the US dollar may well strengthen, and we could well find that price will actually respect this back level. We could find lower levels. But, as ever, we've got to be, as traders, just accepting of the fact that there are times when we look at charts and it's probably best to admit to ourselves that we haven't got a clue. And just to look somewhere else, find some other evidence that just maybe, a little bit more helpful to us. Now, what we've got to just keep in mind is that when we're looking at this 4-hour chart, here we are, this is today, that was Monday and Friday. On Friday, we then had those non-farm payroll numbers, which were not particularly brilliant for the US dollar. And so it allowed the euro to actually kick off with one of these really important engulfing candles. And we've got this sort of bounce on up. But what I'm going to do, I'm going to come right the way on down now and say that, I'm quite happy to be really quite unclear as to where the daily chart and indeed to some extent that 4-hour chart is suggesting that price really wants to be moving. But then come down to looking at the intraday trade possibilities and look at this morning. There was a beauty. There was an absolute beauty. What we can see is that price moved down. And it moved down. You can see a couple of fib levels which have been picked up here. We've also got another important fib level which was picked up at 50%. The grid also is showing that we've got a level which was a 61.8. So we've got a whole conglomeration of fibs that came in at this level. And we've got one or two extreme candles. First of all, we've got one just over here, which wasn't actually the low. And it's a hammer candle. Price did actually go slightly lower than its lower wick, but not for long. And it then came back up, and then we start to get bullish candles. And these extremes, with bounces coming on up, can very often be some of the most rewarding trades that we'll ever get. The risk reward is fantastic. And they're the sorts of moves that can mean that if we can just take a few of these and tuck away what would be a very useful little sort of 40-odd pip run, and we add a few of those together, the pips really do mount up quite quickly. But if one didn't actually get in right the way down here, around about 32.50, 32.55 region, what we've then got is a beautiful little Hallmey break. And those Hallmey breaks, again, give these fantastic entries with pretty close stops. Yeah, Forex Scout, you're absolutely right. In fact, one of the great problems that we as full-time traders have is that we think we are full-time traders, and consequently we've got to be doing something all the time. But so often the best position to take is no position at all, and to sit on our hands and wait and wait and wait until we've got the right setups. We certainly had the right setup here this morning as price moved on up. And lo and behold, look at that. It's popped up to a back level. So when we've got not only a bat level picked up, but also we've got a candle, which most certainly is a topping bearish candle. If we look at that big red candle, which has got a high tail, the tail of it, or the wick, or the shadow of it, is substantially more so than the body. That is a shooting star. And it's the most bearish candle in this entire rally. And so it's telling us that just maybe this move has actually come to an end. And we can also put in a little bit more analysis. We can just take this little low that there was, take it up to a significant high, and we can look at the distance travel and look at this. Lo and behold, it's gone more than 100% of the first swing. It's actually gone up to 127, and that is slightly more than a standard ABC type correction or a measured move. It does indeed, yeah. And the key word there, Grug, is that it's possible. It's a possible reversal. Could it retrace to 327? Haven't a clue. Who knows? But this move, this up move, this breakfast trade is all over now. And in fact, there are times to trade and times not to trade. And what we want to be doing, we want to be trading at the most liquid time of day when most of these sort of Fibonacci levels are most likely to be more valid. And that is where we've got the UK open around about that 6 o'clock through till around about 9:30 time. And then again, when New York opens around about just after lunchtime here in the UK, and around about the 3 p.m. level, where we're likely to get major volume coming through from New York, and then things sort of run right the way through, usually until around about 4:30 in the afternoon UK time, when it tends to quieten down. So there are those two key times when we as Forex traders really want to be taking note of what is going on. You got it. Absolutely, Forex Gal. Yep, indeed. Indeed. We've also got extensions built into this so that it's just measuring the distance down from this level at 132.70 down to 32.45, and double that was that move up to 32.95, just shy of the 33 level, 133, and we've now clearly got those two levels which picked up with a very, very bearish candle. So the evidence is there to be seen. Right, so much then for that euro. Let's just, we'll pop this down to a 5-minute chart, and the 5-minute chart is looking probably a little bit busy at the moment, but that picked out the low. We can see, let me just make a slight adjustment here for a moment. Bear with me half a mo. We'll just knock that off, bring it back on. And let's just tidy the chart up a wee bit. We can see this low that there was that came in there at 7:30. The down move got broken, and we've got a key candle here with a little dot just underneath it. And away we go. Right, that's purely to differentiate slightly. Yeah, I could just change that to percentages, but what I just did it purely for clarity of the other main numbers being just a little more clear, and the ones with percentages on are actually the slightly more important ones than the ones that just have the round numbers on. Right, okay. So that's looked at that one. I suppose we should just take a little glance at cable, because we've had a good run on cable this morning also. Let's go then and work through the time frames. End of day traders. Well, end of day traders will have been long from Friday, because we have this engulfing candle. Okay, they will currently be long end of day traders, and we'll be waiting to see if there's going to be a major correction from this level or indeed not. These little blue shaded areas with red outlines, these are important resistance areas. And we can see, I'll just bring that one forward, that it's right bang in that area of supply right now. Okay. Now that area of supply might be enough to push price on back down, or indeed it just might push on up through. But the key thing is price has popped up yet again to this 154 level and is suggesting that it's going to have a bit of a problem moving higher. And we can see that because, lo and behold, it's hit a bat level. It's hit a bat level. It's come out of this level at 151, which was a Gartley reversal, and it's struggling somewhat. We've actually had this morning this pattern which did go lower, then it went higher. So we've got one of these little broadening formations yet again. So the market is a little bit confused right now. Can't make its mind up whether it's going to go higher or lower. But let's just look at what went on this morning for an excellent breakfast trade. We've got the fib finder picked up 3 important levels as price came on down. And the pattern also set itself up for a beautiful little higher low. And as price came out of this pattern, and I just use this line, it becomes a buy with a stop just underneath the pattern. Look at the pips, 10 pips. Add on a little bit of spread, a little bit of slippage. We've got a stop which is no more than 13 pips. There we are. That was signaled there. We had time to get round to working out what was going on there. Had about an hour to do so. And then price moved on up for a very, very useful little run. Risk-reward ratio, with this one popping up to the 70 to 80 region, well, you can see what the risk-reward ratio is. It's very, very good. And of course, it came to an end as price sort of came up towards that 154 level with, again, a couple of the important fib extension levels that were picked up. And so that trade was over after price had moved on back down, attempted to move higher and failed. This is a multi-point reversal where we've got a point 1, a point 2, a 3, a 4, and a 5, which then engulfed right the way down. So that bull move then lasted not very long, as you can see. Best part of the move took place over about an hour and a half. We also had some UK news out at 9:30. And UK news plays do work exceedingly well because there's so much leakage that comes out of the UK news machine. The news is usually signalled prior to the actual announcement at 9:30. Now, what we can see is that on this move on down that ran between approximately 7 o'clock and 8 o'clock was that this was just setting itself up all the time for a move where we've got a hammer at the low, a higher low test, another higher low test. This is the breakout move. It came back for support, found it, and away we go on the upside. So there are a couple of nice little breakfast trades there, which sorts of moves that we get several times a week. And intraday traders who can just put in a few hours can pick up these trades relatively easily. Right, Borgie. Yeah, interesting, that one. Interesting. In general, Borgie, I don't take news trades, meaning that I don't put trades on as soon as there's been an announcement. What I will do, though, is that I will trade before and after. So, for instance, this morning we had a 9:30 news announcement. The market actually tipped its hand well and truly before that. So the trade to take was the one that was going to be put on prior to 8:30 this morning. And we just rolled it on up. We rolled it on up using money management to take 2/3 of the profit. And we take 2/3 of the profit usually before the announcement actually comes out, because there's always that possibility that it's going to wallop the other way. And by taking up large share of the profits prior to the actual announcement, then we're completely safe. Stocks can be set to break even then on the final amount. And if we do get more out of the move from the actual announcement, as we did, then fair enough, it's the icing on the cake. Now, as you'll notice, that we actually got the announcement, and it then gapped up, but it left this massive shooting star, and that was the cue to say, right, well, enough's enough. Let's just close that now with that additional little windfall profit, and then move on, go off and have fun for the day, or indeed, do a bit of analysis and see about our other opportunities getting set up. Yeah, Drew, they most certainly are. In fact, harmonics is nothing new. The major harmonic patterns are the ones that you've actually just mentioned. And, there are just words that have been applied to them. And there are, quite a number of wise guys out there who take exactly the self-same patterns and call them something slightly different. But the key thing is that we do find that very often we will get reversals at those levels. They're all harmonic patterns. And they're at levels at which the majority of traders are not really aware that there are likely to be reversals. Now, in the room, there are quite a few people who have made full use of some of this software, and I've indeed got a course called the Harmonic Trader course, which actually builds in the software and shows exactly how to go about trading these harmonic patterns and indeed the wave formations. Right, now, guys. I've got one or two other things that I just want to look at on the list. If you've got any charts that you particularly want to look at, then do throw them in. I'm just going to mention one that was a trade that a trader friend of mine actually took. That's absolutely right, Drew. Yeah, the auto fib finder is all part of the package. And I just want to point this one out to you. It's the British pound against the New Zealand dollar. And this one does move. It's a good high ATR move. And this was an opportunistic trade that a friend of mine took. And he caught this one beautifully just above 190 and just ran it up. And he made a 3-day profit on it. He got out of it yesterday morning when it hit this dark level, and he was right to do so because price came on back down. Now, if we then look at the 4-hour chart, we can actually see that right the way down here, sub 191, it set itself up for a beautiful base. And that beautiful base was formed over a whole series of days, and his trigger was this engulfing candle. And he ran it from 191, and he ran it right the way up to the high, and he got slightly better than 197. And picked himself up 600 pips in 3 days. So a nice little move, and all of that was done with bids. Now he's a trader who doesn't trade very often. He will sit on his hands for a long period of time. And he's a very patient guy. He's a very patient guy. More patient than I think I could, than I could be. Now, just want to look at the euro yen, which in common with the chart that we've just been looking at has got plenty of ATR in it. It moves throughout the average day. And what we can see is that on the daily chart, prices hit a bat level. It's struggling to move on back down. We've had a test of the high there at 132 with one of these doji candles, a go nowhere candle. Again, it's in confusion, can't quite make its mind up whether it's going to go higher or lower. We then had a sell-off yesterday, and this sell-off has managed to find some support at the 130 level. It's found that support this morning. So if we work down the time frames, the 4-hour chart is telling us that that's now hit a Gartney level. And this Gartney level has managed to propel price up for quite a few pips so far. And you will notice that the bottoming candle has engulfed the previous one. So we are combining a little bit of harmonics, a little bit of Fibonacci, with a little bit of candle analysis, and that's suggesting that just maybe this move, which has actually already given quite a reasonable little bit of profit, might even have more in it. The current candle that's forming, you can see that that's one of these haramis, and if this runs through until 2 p.m. today, when that candle completes, it'll be the next move after that, which could coincide with that 3 o'clock in the afternoon, which is 10 o'clock New York time, when the volume could bump in, and we might then see another major move coming out of this. Down to the 15-minute chart. Well, we can see that was an early move that kicked off. People such as myself, who don't get to their desks until 6 o'clock, did actually have this opportunity to get in on this little harami break. And again, we took just a modest number of pips out of this one until it hit the bat level. And as it did, that was the cue to say, time to take profits. And away we go. Now, guys, I'm just sort of watching a number of people attending, and we've had a number of people sort of have come in a little bit later. If you want any more information on most of this stuff that I'm talking about, don't hesitate to drop me an email, george@clickevents.co.uk, and I'll sort of fill you in as much as I can. Now, let's go and look at another chart. And the other chart I just want to take a little look at is, well, we'll take a look at two. First of all, let's look at the Japanese yen against the US dollar, or the US dollar against Japanese yen, I should say. And let's just have a look at this one. The daily chart. The daily chart. This is in answer to your question, Edward. But this is where I'm doing my perspective and planning, if you like. I'm doing my analysis. I want to get the big picture. I want to see what is going on. And the big picture is telling me that it's hit this Gartney level. And the most likely thing is that price is consolidating. It's moving on down. And goodness knows how long it's going to move on down. It may well have completed its move down, but there could be quite a bit more to go. But at the moment, we've had this little correction, and that correction has come down from the 78.6 level. This to follow through and complete a Gartney pattern target level 1 price needs to get down to 95, and level 2 is going to push it all the way down to the 91, 92 region. But of course, that may well not happen. And I then look at what went on here. We can see that we've got today, Tuesday, Monday, Friday, Thursday was a big up day. So where is price now in relation to Thursday? Well, the answer is going to be in the lower time range, right the way down to the 15-minute chart. Lo and behold, it's hit a Gartley. And that Gartley is suggesting that we should be buying it. In actual fact, we've had a signal right now as this is just broken. And it suggests that the US dollar is going to be strong against the Japanese yen. Now, it did earlier on today hit this Gartley level, but the key thing is it's come down to an extreme in the region of where price has actually found some buying support previously. So there we go. And there we are, down to the 5-minute chart. We can see quite clearly we've got this level. We've got a very interesting ABC retracement. This is a classic Gartley pattern, and it's got candles which are suggesting that it just might be ready to take a run. Now, I want to link together the Japanese yen with the Australian dollar. And that is the AJ. This has been moving down. It's been moving down substantially for a period of time. We can see that now, if I put a line across where price is just now, it's picking up previous areas of support and resistance. I can also see a 5-wave move down. So no surprise then that the decline, at the very least for the moment, has stopped in its tracks. We've got a bullish day. We got a bullish day last week. We've got a bullish day today. Look at how this was completely engulfed. So this is one well worth watching. It's got itself a little bit carried away this morning with this move. And as mentioned earlier, one of the problems that we UK traders have got is that these moves kick off with Australian-related pairs, and they kick off at a relatively unsocial time for us. But it's kicked off nonetheless. And having looked then at the daily chart, at the 4-hour chart, it's now well worth watching to see if we're going to get a major correction coming on back down, which just might give yet another buying opportunity. It's not there yet, but it's looking really quite interesting for a potential run higher. Right, so there we are. That's the AJ. And one other one that I'm just going to throw into the mix today is the loonie. Which is also reflecting strength. There we go. We've got the USD CAD, and yet another Gartley level has been hit, and that is a perfect Gartley pattern. And price has actually moved on up. We've got a nice little correction, and this one again looks as if it's all ready to roll. So there you are, guys. What I look at is that I look at daily charts. I look at the 4-hour chart, and I will look at the 30-minute, the hourly, the 20-minute, but I find that the 15-minute chart is a very, very useful one to give me the perspective of what is going on. This one kicked off. As you can see, we have got a whole series of very bullish candles. They ran through very conveniently, 6 o'clock in the morning, just after 6. Then away it went. And look at that. Not a massive move, but what we don't We don't necessarily need massive moves. We just need moves that we can see are going to be moving in the right direction. Very kind of you to say that, Ray. I hope all is well. And you got it. I finally take the trade coming right the way down to the 15-minute, and I'm going to be looking at the 5-minute, and the 5-minute chart tends to be my trigger. And we can see how things actually kicked off quite nicely from here at around about 20 past 6 in the morning. It's then become very spiky. Don't really like spiky markets, so it's a good idea to then take the lion's share of the profits and maybe keep a little piece of it on for what might come through following that. Right, guys. Well, look, time has come when my allotted time is over. Been good to be with you. Hope you've found some of this useful this morning. And as mentioned earlier, don't hesitate to get in touch, and be only too pleased to swap emails with you, etc. So let me just put my email up here, so you've got it for future reference. Right, well, may I wish you a successful trading day, and enjoy your trading. Bye for now.